brokerages are saying about Maruti and why are they positive on this one? Ashesha?
Positive brokerage notes have come in on Maruti. Today, Bank of America Securities has increased the target price from 9,500 odd levels to 10,500 odd levels, and the stock currently trades at 9,000 rupees, indicating a 17 to 18% upside from the current market price. In fact, the report says that Maruti is finally set to make a solid comeback. They say they see promising new launches plugging the white space to the premium SUV segment. Maruti's new models can do well, backed by good design and features and strong marketing capabilities. They say company can gain about 5 to 6% market share over the next 2 to 3 year period, thereby driving volume CAGR growth of 14% over the period FY22 to 25. They also said that they have revised revenue guidance by 6 to 8% and they have hiked their EPS guidance as well by 9 to 10%, factoring new higher average selling prices and lower raw material costs. So for now, Bank of America Securities has maintained a buy rating and given a target price of 10,500 rupees per share. Remember, earlier this week we also had one note on UBS that came in on Maruti Suzuki, where they are maintaining the buy rating with a similar target price of 10,500 rupees per share, where they say that Toyota Hyryder pricing offers great value for money and demand remains strongest in the mid-segment SUV. They also say that they expect Maruti to unveil pricing of Grand Vitara over the next couple of weeks. So both brokerages have given a thumbs up to this particular stock, and hence the stock has been gaining momentum over the last many trading sessions.
Right, so that's the take on Maruti Suzuki and what's driving the gains for this particular counter in an otherwise weak market. Thank you so much for that, Ashesha. But let's bring on board our guests for today. We have Shahina Mukaddam as well as Kunal Bothra joining us on the show. And let's talk some more about Maruti Suzuki and where it is headed from here on. A very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And Shahina, I'll come first to you. Definitely the brokerages are giving a huge thumbs up for Maruti Suzuki. They're expecting the counter to scale, go back to the 10,000 rupees per share mark. Are you also optimistic on Maruti Suzuki, given that they have been pretty much delayed when it comes to their EV venture?
Positive along with the rest of the brokerages. I think we've seen a lot of positive notes, which by itself is a positive upgrades. What I believe is that what we are seeing in terms of demand rebound is something that it's like it seems to be a change over what we've seen over the last 2 years, which have been quite a depressing period for Maruti, for overall passenger the auto demand from for the passenger vehicles in the domestic market. So I think that is reversing. And I think current year is likely to be quite a bumper year. They are talking of overall demand of almost about 40 lakh units in the domestic passenger vehicle segment. So I think Maruti is also likely to show a very good current year FY23 and also going forward FY24, likely to show a double-digit volume growth. Most of their vehicles, the older ones as well as the newer launches, are showing a very good demand. In fact, their Grand Vitara is showing very good bookings, though the pricing is still not been decided. Also, I think if you look at the numbers that we've seen, if you saw the last 2 years, on almost all parameters, like for example, EBITDA margins, the profitability margins, everything had shown a big dip in the last 2 years. If we are going to rebound to the FY18, FY19 sort of numbers, I think the valuations, which looked slightly on the stretch side in FY23 or FY22 numbers, will start looking attractive once we cross this year FY23 going forward into FY24. So I think that is where the excitement is. And also in terms of raw materials, we are seeing raw material costs have started softening. Semiconductors, which is a big issue, has started easing. I wouldn't say that it's behind us, but I think there is some softening in terms of the problems that were there in that area in terms of availability. So I think all things are coming together for Maruti. EV space, as you mentioned, they are not there as of now in a big way, but they are making big moves and they have got good plans to come up with not only EV as well as hybrid variants. So I think Maruti looks decent. Upside, of course, being a very, very large cap, is going to be limited in terms of, you see a 10% return from here over the next 1 year, 15% return, but it's a portfolio stock.
It's a portfolio stock next 1 year, maybe given how large cap it is, 10% return. Kunal, what's your view coming in on Maruti? Are you also giving a thumbs up?
Good morning, Vinny. Good morning, Cheryl and everyone. My sense is that Maruti is now run up towards a resistance point on the short-term charts. In fact, the stock has come back towards a major resistance point, which has been acting on as a resistance for the last 1.5 years for the stock price. So not just in terms of price level, but more in terms of the technical picture. I would probably expect Maruti to try and consolidate over here. I think the better time to try and buy the stock would be when the stock gets into a mild corrective phase, comes back, say closer to that 8,800 mark. That would be a much better level to buy.
All right, so that's the view coming in on Maruti Suzuki from both of our experts, Kunal as well as Shahina. But time for a break on this edition of Buy Now, Sell Now. But when we come back, we will be taking all of your queries. So do stay tuned and write into us. We'll be back soon.
Co-powered by OLX Autos. Only OLX.
Absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. And Kunal, before we start with the query segment, I want to understand how the charts for Sensex are looking for you. As of now, obviously, it's down almost 0.5%, 59,900, fallen below the 60,000 mark. What should we be expecting now from here?
So, we were discussing this a couple of days back that 60,000 is a key pivot for Sensex, and it seems to be that the index is holding on to this level over the last couple of days on the downside as well as on the upside, which is about tend to meander around this 59,900, 60,000 mark for the Sensex. But the two breakout points as well as the breakdown points, which are very essential for the Sensex over the near term, is 60,700 as well as 59,200. These are the 2 points where I believe could probably mark the change of trend for Sensex. So till the time we just hang around that 60,000 mark, we can expect this choppiness, this consolidation to continue. But a break above 6,700 or below 59,200 could be a indication of a strong, a start of a fresh trend for the indices.
All right, so that's the view coming in from Kunal on the Sensex. But let's move on and let's start with the query segment as promised. And viewers who are tuning in for the first time, this is a show where we answer all your stock related queries. So you can catch us on Twitter, Facebook or YouTube, or even write into us on WhatsApp number that is flashing on the top of your screen. Do mention your name, the stock that you are looking to buy, or in case you've already bought the stock, then do mention the quantity of the holding and as well as the price at which you bought the stock at. All right, so let me kickstart with the query segment, and the first one is coming your way, Kunal. This one is from Maleshwar, and he wants to know whether he can buy BEL at current price for the short term.
So I think the stock has gone through some special situations over here, and it's come back towards 110 odd mark. I would believe that it's a better price to try and buy the stock would be an adjusted price, which would be closer to say 100, 102 levels. That could be a much better price range to buy BEL. But it's a good stock. You should have BEL as part of your portfolio as such. But then price-wise, I'm not sure that whether it's the current market price is a good enough price to buy. I would suggest to wait out for 100, 102 to enter the stock.
Shaina, we have this next query coming in for you, and this is from Mr. N. Ramesh from Hyderabad. He's a senior citizen and a long-term investor. He's holding 15 shares of DV's Lab at around 4,410 and 60 shares of Aurobindo Pharma at rupees 800. He wants your advice whether they should continue to hold this one or shift something to more on the defense side like HAL or any other stock.
I think pharmaceuticals has been consolidating for quite some time. I would prefer to continue holding at current levels because of the huge correction that we've seen. Yes, of course, if these are the only stock that he's got in his portfolio, he needs to diversify. There I would prefer something like FMCG stocks like ITC and Marico.
This is for Santosh Kumar. BEL, we had the first query already answered by Kunal. He said 102 would be a right range if you want to look to enter this particular counter. Kunal, this one is coming your way, Shahina, and this one is from Satya. And he wants to know whether he can add Web of Global at current market price. He wants to know what's the medium-term outlook of this one.
Web of Global actually, in terms of valuation, it looks reasonable. But I would prefer going in for maybe at a slight dip from here, there is no issue actually, but if he can buy it at maybe somewhere close to say 350, 355, he would get a better return from here. But there is no issue, he can continue to hold if he's holding.
Kunal, next one is on ICICI Bank, and this query we have is the viewers bought ICICI Bank at a price of 755 rupees per share. Should they look to exit this one, or can they hold for a period of the next 3 months as well?
So I think it's a good time where you can look to book out good profits over here. I think the stock is at 900 plus levels for itself. It's done reasonably well. Of course, ICICI Bank is one of the leaders from the banking pack, and on a longer term basis, it looks very attractive. But it's just that on the short term charts, the run-ups for many of these banking names have been exceedingly high. So there is a higher chance that these stocks may correct from current levels. So purely on that kind of a time scale and looking at the current market setup, I think it could be a good trade to try and book out major profits over here and then look to buy this on correction or on dips.
Okay, this one's from Ramachandran V, and he wants to buy GSFC for about a period of 6 to 8 months, Kunal. So he wants to know, is this the right price to start adding the counter, and what sort of a target should he look at for this one for the next 6 to 8 months?
See, I think there was a very strong rally for GSFC, if I'm not wrong, from 120.25 to 190.98. I think that was the high the stock had made in the first couple of months of 2022. But post that, it's not seen any major kind of a pickup of price action. In fact, the stock at one point had just about fallen to even sub 120 mark, which means that the base or the support for GSFC would be around that 120 levels for the stock. So I believe a better entry price, if you're looking out to buy GSFC, should be closer to that 120 mark. So maybe you can start at 130 levels and then keep on averaging at 125 and 120. That could be a better prospect for GSFC.
The next query we have is coming in from Rajan from Gurugram, and Shaina, this one is for you. They want to know if they can buy Vedanta at the current price for a long-term period of around 3 to 4 years. Would you suggest it, or would you look at some other company which would be a multi-bagger for long-term investment?
Vedanta is very much in the news as of now. They've got very good plans, especially in the semiconductor, which of course will be funded somewhat by the company and by the joint venture partner. I would suggest that you continue holding Vedanta. In fact, even at current levels, it's given a very good rally in the short term, but one can continue adding at any dips that you get for the 1 to 2 year holding.
This one is from Harish Kumar, and he wants to know about IDFC First Bank. He already has this counter, Kunal, purchased at the levels of 55 rupees per share. He wants to know whether he can average or should he look to sell the counter. Do you think that's an advisable thing to do with IDFC First Bank?
I think you should hold. See, my sense is that the stock is going through a turnaround mode for itself, similar to what I anticipated for even IndusInd Bank just about a couple of months back, and the stock has gone through a big change of trend for itself. IDFC First Bank as well, I think, is going through a possible change of trend and as well as a turnaround for itself. So I think these are good times where you can look to hold on to the stock price. Now the only question is that how can you better your entry price from 55? I believe an ideal price for IDFC First Bank should be in the range of 45 to 50. So that means that you should try and take advantage of correction in case if that happens for IDFC First Bank over the near term. And assuming the stock corrects and comes back to say 46, 47 rupees, good point to average.
Okay. Then the next stock that is a query is about Yes Bank, and Shaina Venkatesh from Hyderabad wants to know that can they buy Yes Bank at the current price for a long-term 3 to 4 years holding period?
I would be comfortable, but I would categorize this as a high-risk bet. But I would be comfortable if you buy it, even if you buy it at current levels, you can keep a stop loss of about 15 rupees, and then you can look for a target of about 19 or 19 and a half.
Okay, Omkar wants to know, Kunal, if he can average New India Assurance at current price. His average buy price is 108 rupees per share.
I would suggest not to average at current levels and to avoid the stock. In fact, if it comes closer to your cost price, then I think good time to exit the stock.
Okay. Shaina, the next one is coming in a query from Chennai from Ilango. BHEL, he's bought at around 1,000 shares at 64 rupees. Can they continue to hold this for a 1 year time period?
I would suggest that he continues to hold it. because I think there's a lot of change that is happening in terms of profitability. It's more like a turnaround stock. I would hold it. I would keep a stop loss of, if he's holding it for the maybe longer term, he can keep a stop loss of 55, and he can hold it with a target of about 72.
One is from Matthew, and he's writing to us from Kochi. He wants to know what would be a good entry level for UPL, and he has a 1-year horizon. Kunal, what's your take coming in on UPL?
Well, I would suggest frankly to avoid the stock at current levels, because my sense is that the chart patterns being formed on the daily time frame for UPL is not very exciting. In fact, it's forming a bearish head and shoulder pattern, even though the stock has not confirmed a breakdown. But then, in such a kind of a market setup, if a stock is forming a bearish kind of a pattern, unable to break out of this pattern on the bearish side, that's generally not a good sign for the stock price, which means that either the stock is likely to consolidate over here, or possibility of a correction could be much higher for UPL. So I would suggest to avoid at current levels. A better price to buy the stock would be assuming if the stock corrects sub the 700 mark. So 680 could be a better price where you can look to buy.
The next query we have is on a Sequent Scientific China, and this one is coming in from Prashant. Has 721 shares of Sequent Scientific at a buy price of around 161 rupees. I'm so sorry for that. And what should they be doing? Long-term investors, should they continue to hold this one?
Expensive stock, I would recommend that he switches. I would prefer something like, the stocks which are in fancy as well as are showing good momentum as of now. Something like in FMCG, as I mentioned earlier, ITC, Marico, or even defense if you're looking at. So I would suggest he switches from here.
Okay, this next one is coming in from, KR Balan, and he has 500 shares of Nosil, 50 shares each of DVs and alkyl amines. Kunal, should he continue to hold on to all of these counters or look to switch to either Dalmia Bharat, DLF or Wipro?
Dalmia Bharat I would avoid, because I think the stock has run up exceedingly high, so I think it does make sense to try and buy the stock at current levels. No sale, I think DV Slab or Dr. D is what you mentioned. I think both these stocks, they seem to be quite okay on the charts. May not be a best time to average these stocks, but yes, I believe that the entire pharma and the so-called such kind of a basket, they're going through a bit of a grind for themselves over the near term. So I'm not sure of how extensive the grind could be for these pharma names, but at least in terms of rally, they could be some distance away from these stocks, bouncing back and coming back into a strong momentum. A better play would be a shift of sectors. So if you're looking to switch, then I would believe switch to financial, switch to banking names, auto stocks. I think those are the pockets where you can look to concentrate, and specifically stick towards large cap names from that kind of a basket.
Okay. The next query we have is coming in from Alma D'Souza, and this one is on Morpan Labs. They purchased it at ₹55, and the current market price is 34 rupees China. They're making a huge loss over there. Do you think this will recover anytime? Should they average it, sell it for a long-term period? What is the view on this, at least a 1-year time period?
I would suggest that they switch from here. It has never been a performer in the pharma sector, and I don't believe one should remain in this stock. So he can switch from here, maybe get into some of the stocks that have been suggested in terms of banking, in terms of FMCG.
Okay, this next one is coming from Akshay Bhosle, and this one is for you, Kunal. He's saying he's bought Reliance Call of 27,000 at 62, one lot October expiry. He's asking what sort of a target can he look for Reliance for the next Diwali?
Well, I would suggest to hold on to the stock. Now, I'm not sure of which expiry you've bought for Reliance Industries, but if it's a strategy which you are looking to adopt on a regular basis, then I believe that there's a higher chance that Reliance Industries can continue to move up higher. 2,700 could be a near-term possibility for Reliance Industries over the near term. So, assuming for the next 1 to 2 months, I would be bullish on the stock price and would look out for 2,700-ish as a target.
It was October expiry, Kunal.
Again, as I said, that it depends on the premium at which you bought, depends on the outlook which you are having for the stock price. But I would believe that 2,700 could be a reasonable target which you can look out for.
Okay. Shaina, this next query we have is coming in from for Zenzar Technologies. Dilip from Dubai. is having 350 shares of Zensar Technologies at around 330 rupees per share. They want to have a long-term view. What is the long-term view coming in for this stock for a 2 to 3 year period?
Well, actually, shorter term, the stock looks a bit weak. So if he's looking for short-term returns, of course, he should switch. But I personally also hold it, and I have a belief that with a change in management, a change in strategy, the longer term will be better. Shorter term, they are facing some pressure in margins. The overall IT sector is also going through a, I would say, negative sentiment and slowdown in terms of overall growth. So I think the overall sector is taking a hit. But if you are in Zensar Technologies and you're holding it for a 3 to 5 year period, I believe there is value.
Okay. On that note, viewers, we'll slip into a very short break, but don't go anywhere. We'll be taking your queries after this break as well.
आग को फैलने से रोकना।
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and markets still seem to be under pressure, but it's the mid-cap index that is trying to stage a recovery. The mid-cap index just turned positive for a tad bit, but now back in the negative territory. So let's keep an eye on the markets for now. But let's take the next query then. The next query that I have is coming in from Nino. And Nino is asking Shahina about Tin Plate India. He already has 100 shares that he's purchased at a level of 300 rupees per share. He wants a long-term overview of the counter. Does it make sense for him to stay put with this one for the longer term? Or do you think that this one merits a switch?
I don't have any coverage on the stock.
Okay, then Kunal, let me take this one for you. On the charts, how does Tin Plate India look to you? Hasn't this counter actually seen a massive rally as well in between?
Well, yes, I think it's seen a phenomenal rally. It was a two-digit stock, I think around 50 or 60 rupees from 2020 lows, and the recent high or the previous major high in 2021 end 22 start was just around 425 plus mark for Tin Plate. So it's done exceptionally well from those lows, and I think right now we are seeing many of the mid-cap names still not being able to recover and then come back towards their previous highs. So Tin Plate is a stock which is just about trying to get to a struggle period, but then I would still sense that the stock charts look quite okay from a long-term play. So if you're a long-term investor, you can look to hold.
Shaina, this next query we have is this query is coming in from Delhi from Snigdha Das. Wants to know about Bharat Dynamics. Is it a good time to buy this stock at current levels for a long term?
Bharat Dynamics, I believe maybe you can look to hold it at current levels, and if you want, you can add it at dips because there's a lot happening in terms of government orders and defense orders. So I think the momentum in earnings could be better from here. So valuation is also decent. We can add at slight dips, I think. That would be better. And hold it at current levels if he's already holding.
Okay, this one is coming in from Shubha M and wants a suggestion on a large cap stock under the FMCG, IT, manufacturing or steel for the long-term investment. Long-term investment being 5 to 7 years. Shaina, I will request you if you could. I know it's a tough one, but only one stock if you could suggest because we have a lot of queries lined up.
In FMCG, I will go with an ITC for the long term. I think there's a lot happening on multiple fronts.
Okay. Kunal, this next query we have is coming in on Trident. Amarnath from Bangalore is holding 2,000 shares of Trident at an average price of 46.65 rupees per share. Short-term advice for this one?
Well, I think you can look to hold on to the stock. Don't need to average at current levels, but just hold on to the stock. And whenever the stock gets into a turnaround phase, maybe crosses at levels of 45, 46, that could be a point of a breakout as well as a turnaround for Trident. So as of now, hold.
Palani Appan wants a view on GHCL, Kunal. He already has, I believe he wants to actually invest in this particular counter. Do you think the GHCL merits a buy?
Well, yes, it does. In fact, it's also one of the picks which I recommended from a long-term play, just some time back. And I think the chart patterns are looking quite attractive for GHCL. The only concern is that you have to have a longish-term time horizon for the stock to try and get into a big breakout as well as a trending mode.
The next query we have is coming in on Infosys, Shaina. This one is, missed the viewer's name, but yes, the viewer is holding 1,100 shares of Infosys at around 1,483 rupees. What should they be doing? Should they continue to hold or look to sell?
Well, if he's a short-term investor, I think it will be better if he gets out of the stock because the short-term trend looks bearish. But at the same time, if he's a long-term investor, 3 to 5 years, I think Infosys valuations, even at current levels, is not expensive. There may be some slight degrowth over the next 1 to 2 years in terms of profitability, but at the same time, I would continue holding him if I'm a very long-term investor. But there are a lot of brokerage reports that are coming in, which are negative on the whole sector, IT sector, and as Infosys also. So if you're a short-term investor, I think be very cautious.
Okay, this next one is coming in from Chintan Kapadia, and Chintan is saying he has 20 shares of Persistent, which he bought at sub-1000 levels. He's saying that it's been 3x for him, but currently the counter is falling and he's worried about it. So he wants to know whether he should continue to hold on for the longer term. What's your take on this one, Shahina? I'm sure when the markets are volatile, it does get long-term investors a bit jittery about their holdings. What should Chintan do with his holding with Persistent?
Well, again, another IT stock which is showing some sort of weakness for the shorter term. If he wants to hold it, he can hold it, keep a stop loss of about 3,200, which is a very small, I mean, I'm not giving too much of a leeway from here, but he can otherwise move to some other sector which is, more in favor as of now.
Kunal, coming to you, the next query we have is coming in on Devyani International. Sachin from Bangalore wants to know if they're planning to buy for a short term, what should they be doing with the stock? Can they enter this one?
Well, not at current market price, but I think say closer to 165, 75, that could be a better zone to buy at Devyani International. So what happens is that the stock has a tendency to try and bounce back closer to a major support point. And for Devyani, that support point or that pivot range is around 165 to 175 mark. So buying at current levels may not attract very good risk reward, but if you happen to get the stock closer to that band, that would be a point where I would suggest that you can look to buy and go ahead.
Okay, this next one is coming from Madhuri, and she wants a fundamentally strong counter in IT sector for good growth. Actually, we've spoken already about IT space, but nevertheless, Shahina, one stock for the long term in IT.
Well, I'll go with the most expensive and, in my view, the best in the sector, large cap TCS. There, of course, I mean, with the overall market in the shorter term, likely to show some bit of dips. So I think the investor will do well to wait for the next 2-3 months and buy it at any major dip that you get and then hold it for the long term.
Kunal, this next one is on Chola Finance 810 call option. Ankit from Noida wants to know what should they be doing with it? 29 September expiry.
So I'm not sure what price you've bought, but assuming if you've bought it, say in the last couple of days, just around this 18 mark or 20 mark where the option is trading right now, then I believe you can continue to hold on. I think 25 seems to be a good point where the stock is trying to establish a short-term target. But the stop loss for the trade, you could probably have to keep it to yesterday's low, which I think is around 15 mark or 16 mark for the call option.
Okay, Kunal, this one is coming in from Chandan, and Chandan has Aisha Motors, and he's saying that his buy price is 2,750 rupees per share. He wants to know, should he continue to hold on to it right up till Diwali, or should he look to sell this counter?
No, I think you should hold on, and I've been of a view that many of these auto stocks are going through a cyclical breakout, and this could be a breakout which may not last for just about 1 to 3 months, but this could be a breakout which can last for at least a couple of years, if not more, for these performing names. So I would be of the belief that you have to be a long-term investor for such kind of stocks. M&M, Aisha Motors, Tata Motors, these are a few of the picks which I have reiterated time and again, and would continue to be bullish on it for a long-term play.
Shaina, this next query is from Anandu, who's asking about Jindal Saw. He's holding 1,000 shares of Jindal Saw at 95 rupees. What should they be doing with this one? Should they hold if they have a long-term view?
Jindal Saw is something that, you can continue holding. You can have a target of somewhere close to, if you're a medium-term investor, target somewhere about 97 to 100, and you can keep a stop loss of 80.
Okay, this one is coming your way, Kunal, and this one is from Kapil Sikka. He's saying he has 11 shares of Bosch. purchased at 16,838 rupees per share. 5 shares of Nestle purchased at 19,151 rupees per share. Now he wants to know whether he should switch from both of these counters or look to average his position or look to invest in large cap names such as Infosys, TCS or Reliance Industries for a period of 2 years or so.
And these stocks are quite good enough, and I'm sensing that you probably have these as a part of your core portfolio. They may not just be arbitrary stocks or individual stocks. So purely in that regards, since I'm assuming that these are part of your core portfolio, you should definitely look to hold on to these quality names.
The next query we have is coming in from Vishal from Dubai, and he's asking about, is it a good time to enter Aarti Industries and Balaji Amines for a long term at the current market price, Shaina?
I think, after a period of lull, most of these specialty chemicals have started to again show some bit of momentum. If he's buying Aarti Industries, he can buy it at maybe current levels and then keep a target of close to say 970, 980.
Coming in from Srinivas Amarnath, and he's saying, Amarnath, and he's writing to us from Bangalore. He's saying that he's bought 72 shares of Ipca Labs at an average price of 1,076 rupees per share. Kunal, he wants to know about the short-term view on this one, and can he average right now?
Well, I would not suggest an averaging out at current levels, but you can continue to hold on. The only concern with averaging is that the stock is getting into a corrective mode, consolidation sideways, mode for itself, and it's very difficult to anticipate that when would these kind of stocks would start getting to a breakout of momentum. So it's okay that you buy them or average them a bit more costlier when the momentum comes back into these names. So I would suggest to hold on, but not to average at current zone.
Kunal, coming back to you, actually, this query is coming in for Marico, and Praveen wants to know, is it a good time for buying Marico at current levels for a 6-month to 1 year holding period?
Well, yes, it makes a lot of sense. I think many of these FMCG stocks are going through a big breakout for themselves, and my sense is that possibly over the next 6 months, many of these FMCG names, the likes of HUL, Marico, etc., they could probably try and come back to their all-time high levels, if not go beyond that as well. So purely on that anticipation, I would suggest a buy.
All right, it's amazing. We still have a lot of queries that are still pending with us. But with that, let's quickly kickstart with rapid fire and try to take as many as possible. The first one is coming from Archana. Dream Folks, is it good to hold or sell? Bought at 455. Newly listed counter. Shahina, what's your take?
Yeah, he can hold it. Hold as of.
Kunal, this one is a short-term query coming in from Anand from Gurgaon on Lemon Tree, holds 2,000 shares at 69.5 rupees. Hold or book profits?
I would suggest to hold on.
Okay, Aman Soni, Godrej Properties, average price of 1,442. Should continue to hold or exit, Kunal?
I would suggest to hold.
Okay. This one we have is coming in on GHCL. Yogarani from Saudi Arabia is holding 300 shares of GHCL at 694. Should they continue to hold this or book a profit, Kunal?
I would suggest to hold on to GHCL.
Okay, Senthil has 49 shares of Ramco Systems. The stock is down 42%. Should he continue to hold or exit? Long-term investors. Shahina? Ramco Systems it is.
I think he should exit.
Okay. Kunal, what's the view coming in on Bajaj Finance? Atul from Mumbai wants to know if they can buy this one for a 6-month time period.
Well, not at current levels, but yeah, you should have a strategy of buying on dips below the 7,000 mark specifically.
Okay, Wilson wants to know CESC can be bought at current level and what's the near-term target, Kunal?
I would not suggest a buy at current levels. I think the stock is absolutely sideways, so suggest an avoid.
China, sale, can the viewer look to buy and at what rate?
Sale, yes, he can buy it, and if he can buy it at current levels, then he should keep a target of 85 plus stop loss of 77.
Okay, Mayank has 500 shares of Maharashtra Scooters at 4,000. He wants to know, can he hold for the next 5 years, Shahina?
Maharashtra Scooters, I think I'll pass the question.
All right.
Okay, Kunal, then we have a query coming in from Selvam from Chennai, holding Shakti Pumps at 865 rupees. Hold or dispose?
I would suggest to exit the stock.
All right, and with that we come to the end of the queries as well as rapid fire. But there is one query specially for you, Kunal, and this one is from one of our viewers who wants to know when should ideally one look to book out profits while investing in a stock. He wants to know Should he look to book out profits when it is 42%, the stock has risen, or around when it is 15 to 20% profits? What should he do?
See, I'm not sure of investing in terms of what time frame you're looking out for, but ideally, I think I've maintained the stance that generally, if you get a 6-month kind of a time frame return of 15%, that's good. That's a very good return which you are aiming out for, especially in quality stocks. On a yearly basis, I think closer to 25%, 30% return is a very good set of returns. So it depends on what time frame you've gained this return, 42%. But then I think if you're looking to buy the stock, sell the stock and ship to other name, that could be a better strategy as well.
All right, and that query was from Manish Raju. With that, thank you so much, Shahina, as well as Kunal, for joining us on the show, resolving all the viewer queries, trying to take as many as possible, also sharing your views on Maruti Suzuki. And viewers, yes, we've tried to accommodate as many queries as possible today, but if we've missed out on your query, don't be disheartened. We'll be back tomorrow, take as many queries as possible. But for now, we slip into a break on this edition of Buy Now, Sell Now.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we...
Welcome back, and you're watching Buy Now, Sell Now on ET Now. And we do have the management of Tamilnad Mercantile Bank joining in with us. This company did make its debut today on the D Street. It was almost a flattish debut coming in from them. But let's move on and welcome on board Mr. S. Krishnan, Managing Director at Tamilnad Mercantile Bank. Sir, firstly, I do want to come to you. Good afternoon to you. And let's start by talking about your capital adequacy post the IPO will be north of 25%. Do you plan to enter different segments to look for growth, and what is your growth guidance coming in?
As you rightly say that my capital adequacy per se now it will increase because of the capital augmentation now which has taken place, but that will be properly utilized, and as far as the business segment is concerned, the bank will continue to focus its thrust area, that is the RAM segment. If you look into the business mix of the bank, the RAM is constituting around 88% of the loan book. We will continue to be focusing on that. That is the core strength of the bank. So we will continue to that. There are good potential available in the RAM segment. And again, if you look into the place where we have a lot of concentration, that is the Tamil Nadu. Again, that is a state which has the second largest GDP. And good potential is there. We will be continuing to focus on that so that the funds can be utilized judiciously and can protect the stakeholders' interest by way of the ROE and ROA.
Right. Good morning, Mr. Krishnan. This is Cheryl also joining in the conversation. And due to RBI's direction for listing, your branch expansion plan was on hold. But once now the bank is already listed on the bourses, what are the branch expansion plans that you have? If you could take us through the same.
Today, it has been listed, so we will be approaching the Reserve Bank of India for lifting the ban. I am sure that the RBI will also be acceding to that. Then the bank will be going ahead with the branch expansion. Already a plan has been drawn, which is being reviewed once again, so that the potential centers can be identified and we can tap the business. This will be taking place very shortly.
And then how are you looking at the deposit side? You may eventually need a strong granular CASA ratio. Currently, compared to other listed small and mid-cap banks, your CASA ratio is lower at around 30.5%.
That's why I said, as far as the CASA is concerned, you are right that compared to the overall other banks, my CASA is a little less, but nevertheless, it is not so low if I compare with some of the players who are operating in that geography. But if you look into the nation as a whole, the CASA by and large comes from the eastern and northeastern part of the country. So when we decide on the branch expansion, we will be factoring this as one of the key element to decide the branch expansion. Thereby we can have more foots there and increase the CASA.
Right, Mr. Krishnan, 74% of your deposits and 76% of your advances are all skewed only to one state. 2 years down the line, where do you see this number actually headed? And also, has the bank set an internal target of reducing this exposure to just one state? Do you plan to have exposure in other states as well?
See, if you look into today, my presence is also like that. If you look into today, my presence is around 80% or in one state. When it is so, naturally the assets or liabilities are also from that place. But if I look from the concentration risk, if you simply look into the numbers, it will look that the concentration risk is there. But when I look into the state has got high potential. The state has got a high potential, and if you look into the asset side, where normally there will be a concern, but TMB has proved that its underwriting standards are extremely good, sound, and its recovery mechanism is one of the best. Thereby, the NPA ratios have been kept at the lowest, and going forward, the same will be maintained. That is our aim. Hence, the concentration risk is properly mitigated. Going forward, as I said, that we will be deciding on the branch expansion. We will be deliberating shortly. We will have an exclusive board meeting for this, wherein the board will be deliberating and will be taking a call on the further expansion. And we will keep you, the investors, informed.
Okay, thank you so much, Mr. Krishnan, for joining with us this afternoon. But with that, we're absolutely out of time on this edition of Buy Now, Sell Now. Thank you so much from myself, Cheryl, as well as the team who put the show together. But don't go anywhere. Markets at Noon will come up next with Cheryl and Pankaj, so surely wait up for that.
आग को फैलने से रोकना मुश्किल है, पर
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear.